Welcome to Phillip's Know Your Fund Manager series. Today, we are very honored to have Mr. Alex Lee, Senior Fund Manager of Prudential Fund Management, to be with us. Hi, Alex.
Hi.
Well, Prudential is a very well-known household name, so I think we don't really need to introduce who is Prudential. But of course, on the other hand, being a big fund management house, you have quite a number of funds. So at this moment, actually there are a total of how many funds, unit trust funds, under Prudential umbrella?
Okay, in PFMB we have about 26 unit trust funds. Currently, our fund size is about 20 billion. In terms of the split between, because we also manage insurance money as well, it's roughly about 75% insurance money and the balance 25% is unit trust.
And within these unit trust funds, of course, being an international house, you have some funds that invest in overseas and some, of course, on onshore, local markets. And of course, you also have between the bonds and equities and all this. So how do you all manage the fund? Is it taking a team approach or is it taking as a star approach?
Okay, I mean, the way it normally works is that it's more of a team effort, but the individual funds will be managed by individual fund managers. But the way we go about selecting stocks is more of a team effort, which I'll go into, which I'll tell you later, because it's more of an investment-driven process. A lot of the times we sit together when we go for company visits, we would then discuss the ideas that we have at a weekly meeting, and when that is debated and we go through all the numbers, if there's a consensus agreement, we have a model portfolio whereby we have all the core stocks that we like will come into that particular fund, and then the individual fund managers will manage according to their style.
Okay, which means that the individual fund managers are allowed to deviate from your so-called model portfolio. And how much are they allowed to deviate from that? Let's say if a stock, the model portfolio says 5% weightage. So how far they're allowed to overweight or underweight that particular stock because of their view, maybe either on the market or on the stock itself that deviates.
I mean, as a total portfolio, the deviation must not be more than 40%.
Okay.
So within the balance, they must at least try to keep within the core. I mean, we do allow fund managers to have their flexibility, whether they are either bullish or bearish on a particular sector. But in terms of total deviation, it can't be more than 40% for the fund.
For the fund, okay. And so in that context, how do you all manage risk? Because now with the market volatility, investors are always very concerned about the risk side of the investment.
Sure.
So by taking a combination, right, a hybrid of the team and a star approach. So how do you all manage risk? Is it also managed by individual fund manager, or you have a centralized risk management team that are monitoring the risk of?
Actually, in answer to the question, it's actually a combination of both. Given that we have a fiduciary duty in managing client money, our approach to risk is actually a big issue for us. So we have actually 4 areas where we, in terms of handling risk. First of all is at the individual level, we have what you call, each mandate has their risk parameters. So we must make sure that certain limits are not breached, whether it's single stock limit, group limit, or even for some of our Sharia funds, certain investment limits cannot be violated. So that's at the individual. Each fund or each mandate has its own particular parameter. Secondly, we have what is called, we use the Charles River trading system, which is what is used not just in Malaysia but in regional offices as well. And that helps us to monitor our portfolio risks to ensure that we do not, there are no violations in terms of whether we're buying or selling stock. So the system allows us to key in orders and to make sure that whatever we key in is in line with what compliance has set inside the system already. So for example, if certain stocks are non-Sharia compliant and we try to buy those stocks in a particular fund, the system will alert us and prevent us from actually executing the order. Secondly, on the portfolio risk analysis side, we actually subscribe to the BARA Malaysia equity model as part of our investment process. And what that helps us to do is to look more deeply into the portfolio risk in terms of looking at understanding the market risk, the portfolio characteristics, and also to sort of understand the sort of risk assets that we hold, right? Basically, bottom line is this Bara Malaysia equity model allows us to sort of, what this Bara Malaysia equity model allows the fund manager to do is to identify the sources of risk and return within the portfolio itself. And then finally, we have for performance analysis, to see where the attribution is from the assets that we hold, we use Sylvan, which is again not just used in Malaysia but also within the regional offices as well.
Okay. Alex, I understand that your main is on the equity side, right? So what is the investment philosophy for your equity portion?
I think the key for us, and not just this is something that's a group-wide mission that we have, is really we believe that really our sort of disciplined research and valuation-driven investment style will help deliver superior returns in the long term. And as I mentioned before, this is what we stated within all the regional offices. I think if you look at it in terms of any pricing inefficiencies, I think for us, we feel that it can be best, it can be best accomplished by using sort of active in-house research and portfolio management. I think the key that we want to emphasize to clients is that we try to maintain a high degree of consistency in terms of performance for our funds on a long-term basis. And this falls really into our investment process, which is we have a 5-stage investment process where we start from stock selection, then we go into research, valuation. After valuation, then we come to our portfolio construction and review and feedback. So all these sort of 5 stages that we go through ensures that we do research, we do valuations, and these are the important drivers for us in the long term. And I think our sort of research-based focus for our view is that it will eventually drive positive returns in the longer term.
Mm-hmm. So in that context, how do you differentiate Prudential with other fund houses?
Yeah.
Because I mean, more or less everybody will more or less say the same investment philosophy or what have you. So what are the competitive differences that Prudential has compared to other houses?
I think if you look at us as a group, we're obviously one of the largest fund managers in Asia. In terms of assets under management, we are managing in excess of about $84 billion. We're one of the largest onshore mutual fund managers in Asia. We have like experts across 9 markets. Thirdly, we have businesses in 10 markets in Asia, from Japan, Taiwan, Singapore, all the way to the United Arab Emirates and also Vietnam. So I think the scale and size of our company allows us, which is, you don't get many companies like that in Malaysia. So we were saying that the access we have to different markets differentiates us in the first instance. Secondly, I think research capability, as I mentioned before, is probably one of the key factors that we have. Within Prudential, we have what is called PruSearch, which basically allows us to pool all our research capabilities from all the different countries into one system. So for example, if we wanted to know a bit more about what our Korean analyst thinks of a Korean stock, we from Malaysia can access this PruSearch and at least get their views. Similarly, other countries may want to know what we're thinking about Malaysian stocks. On a weekly, for us on a monthly basis, we are always contributing for our Malaysia portion. So any updates we have on Malaysian companies, whether it's results or news flow, we will put it into PruSearch, and all our our colleagues from different countries can access and see our thoughts on the market. So I think bottom line is the scale and reach of our company and the regional reach that we have. I think is one of the key factors that differentiates us from our competitors.
Okay, so of course the current volatility may or may not be a very short-term event, right? So in that context, taking that into consideration with probably investor risk profile has changed a little bit due to the volatility. But let's say for a 5-year aggressive investor, how would you recommend that investment strategy?
I think there's no terms of investing, there's no best type of strategy when it comes to investing, but our house view remains that equity probably remains one of the asset classes that we're going to be bullish on going forward. I think if you look at it, the whole environment has changed quite dramatically since the global financial crisis of 2008, 2009. And our view is that the days of making easy money is past now. So what we would advise clients to do now is actually, or our strategy is really a bottoms-up stock picking strategy. Our view is that stock picking is one of the sort of best ways to deliver positive returns, whether it's a short, medium, or long-term basis. So our view is that if you go stock picking, focus on companies that have solid business model, good earnings delivery, and also valuations is important. That's why we emphasize that research is obviously one of the key things that we look at and remains one of our foundations for us in our investment process. If you really want to deliver consistent earnings, stock picking would be the key. And obviously the current market correction that we're experiencing it's good. We believe it's healthy because it allows investors to sort of sift through the good and the bad companies.
So within equity space, how you think investor, let's say with a 5-year time horizon, should allocate, let's say, his money between a local market and other international markets?
I think it's always good to look beyond the local market, at least diversify your portfolio a bit. So our advice to clients is, if you have the opportunity, is to look at other regional markets, because they all operate at different cycles. Malaysia may be doing well at one stage, but the other countries may not be. So you have to have a basket of different, we believe, different countries to look at. So if you look at the overseas markets, it helps to diversify your risk away. That's one of the main benefits. The problem when you focus on one particular market, you have only one. Your vision is very tunnel vision, very narrow. So if you have a broad other regional markets, it sort of broadens your horizons a bit. Okay, diversifies your risk.
Okay, with this, I believe investors were able to get a better picture of how Prudential manage the funds, and also understanding the philosophy of it, and should be able to make some good decision out from that. Thank you very much.
Okay, thank you very much.